Hi everybody. Now, I've said before on my site that I want to start creating content into other areas of interest and expertise, and for me it's investing. I love this area, I love this topic, and I used to teach financial markets and compliance and risk within financial markets, and I miss it. So I'm going to start generating some content thick and fast and hopefully help you guys in your investment journey. Now, I'm going to start off today by giving you 5 tips for anyone that's looking to start their investment journey. Now, number one would be simply start early as you can. And the reason why I say start early as you can is because of compound interest. Okay. Now, for anyone that doesn't know anything about compounding, simply compounding means that you are going to receive interest upon the interest upon the interest upon the interest. Okay, so for example, if you go and invest let's say £1,000 into a bank, okay, or say invest, let's say you're just putting money as a deposit in your bank, you're going to receive interest, okay, on that money. Now, when it comes around to receiving interest, you've already received interest on your original, okay, deposit, and now you're no longer getting an investment into your £1,000. You're getting investment into, I don't know, £1,001, and then the next time you receive interest, it will be interest upon the new amount, okay, that you generated from your original deposit, okay, by receiving the first lot of interest. Okay, hopefully that makes sense, but definitely start early would be a big tip. Number two would be have an investment plan in place. This is something I fell down on, okay, where I didn't have it, and my mentor turned around and said, put an investment plan into place, and everything you want to achieve with investing should be within this plan. So if you've got a certain strategy or a certain asset class you're going to focus on, is there going to be a particular amount, okay, of profits you are going to take to sell? Okay, so for example, are you going to sell if you generate a profit of 10%, okay, of your investment? Is that going to be a point of selling? Is there going to be a type of sector you're going to focus on? Okay, is there going to be a certain amount of risk you're willing to take, or maximum level of risk you're willing to take, okay, in your investment? Everything you should want to achieve within your investment journey should be within this investment plan. Number three would be diversify, okay, your investments. Now, I'm sure most people would know what diversification is, and there's a lot of information, okay, surrounding diversification, but it doesn't mean to simply invest your money into different asset classes. It could simply mean that if you are having a focus on, for example, UK equities within the FTSE 100 or FTSE 250, then you could diversify your investments by picking different companies in different sectors. Okay, maybe, okay, you want to invest into, for example, the banking sector. Well, if you have, for example, if you invest into Barclays, then maybe have an investment into pharmaceutical sector or the retail sector, and therefore you've spread the risk that if one sector falls down, the others, okay, could rise as a consequence or stay stable rather than falling. If you were invested into Barclays, HSBC, Lloyds, that are all in the UK banking sector. Okay. Number four, learn intermarket analysis. Okay, intermarket analysis is a fascinating subject, and it's something my mentor told me to go away and learn, and it really is insightful in understanding how markets work, because pre him telling me this, I always thought, well, the markets fall in isolation. So if, for example, the equities were falling, it's because something, okay, within the equity sector caused it to fall. But you will learn through analysing intermarket analysis that it has fallen off the back of information from a different area within the markets. Okay, so you can, for example, if you look at, let's stick with banking stocks since we spoke about them previously, okay, they are reliant on interest rates. If you think about what they do as a business, okay, they obviously charge people for loans, but they also pay out interest, okay, for deposits. And they're being reliant on interest rates, okay. Obviously, what causes interest rates to move is inflation. Okay, hopefully most people will know this, but inflation, okay, moves off the back of commodities. Okay, because within the inflationary basket of goods, they are all commodities. So if the commodities markets move up, it could be a sign that inflation, okay, will occur off the back of that rise. Then obviously that can give you a kind of place to go and analyze whether interest rates might move up off the back of that inflation. And then obviously that could lead you to a sign that maybe your banking investments might rise or fall off the back of that information. Okay, obviously there's more to it than that, but just giving you a very quick rule and run through of how intermarket analysis could point you towards your investments, okay, or the value of your investments. And the last tip, number 5, I would say, is don't listen to analysts or anyone else. Now, when I say don't listen, obviously you can listen to anyone and take on board what they say, but don't, okay, go and react off the back of that advice or what they've said, okay, without doing your own research. Okay, it is absolutely primary important, okay, that you do your own research. Do not listen, okay, to analysts and go and react off the back of what they've said, okay, without doing it. And the reason why I say this, because obviously analysts are getting paid, okay, by their clients, so they will have an incentive according to the information they provide to the markets. Okay, now it might be completely the right advice, okay, and when you do your own research, it might be off the back of what they've said or might agree with exactly what they've said, but that's okay because that's your research. You just agree with it, okay? But don't go and react off the back of the said without doing your own research. Very, very important you do this, okay? Many people have obviously followed the advice without doing their own research from analysts, and it's worked out very, very badly for their investments, so don't do it. Okay, so guys, very quick video here, 5 tips for beginners that are looking to go into investing. Hope, okay, these tips are useful to you guys. Please feel free to comment or ask questions, okay? Or if there is any content you would like me to create for you guys that will help you, please feel free to comment below and I will happily oblige, okay? Guys, all the best, take care, see you later.